Good morning, this is Ken Long from Tortoise Capital with a daily debriefing for April 13th, 2016. Started the day looking at AXP. We're on 1 minute. Here's the open with a gap up, strong move up. When this didn't fail back towards the RL270 and the Bollinger Band mean, and the VWAP was rising, we played this one as a quick frog. As a leapfrog, with a 30-cent stop, entering, riding the edge of the dragon. Notice the dragon has come all the way out of the river and worked all the way up. When we got the RLCO outside the river, and then the 10 peaked and rolled over. 1, 2, 3, gave it a chance. Exited here. This is about 1R. Next up, a little later in the morning, we're looking at IYR. That's been one of the strongest sectors. It's an alternative, kind of an equity. It's not as strongly correlated to the markets as the broad equity indexes. And so this one was working pretty well. It has been outperforming to the upside, but also selling off fairly sharply in the last couple weeks. And so this is on our radar screen because of the smooth price flow and the reasonably high volatility intraday. So there's a gap up, sells off. We're at quick frog territory here, and from the high of the day, we played this one short at 78 with, again, about a 30-cent risk up to the Z3. We get essentially, and I look at this more as like an owl as well as the quick frog, because we've got the unambiguous move, so it's in play. We get the RLCO outside the river out here. We have the RL10 crossing the dragon. We have the dragon and the RL30 both creeping downward, so we get our stop in. As this trade unfolds, you see our original entry. We'll get that owl pattern. Makes a nice recovery. The dragon keeps the RL10 out of the river. The second entry, I think of this one as the pocket. So the owl I see as the primary turning point. Pockets are those continuation patterns that unfold as we go. Smooth, unhurried, in the pocket, on time, relaxed. When it takes out this RL10, that's another good reason to be in it. Covering both scoops here with the RLCO outside the river. We now have immediately start stalking the owl after such a nice extended move at 10:30. So we're already an hour. This is about slow frog territory. But again, you can get in a little quicker because of the price patterns and the indicators. So exit all. We have the unambiguous move down, so it's in play. Prices move to an extreme out to Z2. Right, so now you have the RLCO outside the river. You have condition 3. RL10 crosses the dragon. Dragon sloping up. 30 is sloping up. Enter. Get paid. Why not? So this is one we just got paid on. We get an RLXD here. Now this is not an owl trade. I don't like this one going short because the slope of the 30 is still up. So what I really want to see is, where is price going to find support? Oh, at the edge of the river, where it ought to, inside the normal flow of the current. You get the RL10 finds, recovers, crosses the dragon here, which has now swum from the south side of the river to the north side of the river. So if this is a pattern 1, this is a pattern 2. It successfully got to the Bollinger Band mean, finds support around the mean, begins to take off. Here you have the RL10 and the 90, and the 30, both leaving the river. This is the beginning of trending behavior up here. This pocket trade gets you in a fraction better. I have a tight stop at the bottom of the river. When it starts moving out smartly, getting up to the VWAP, I go ahead and peg that in, and I'm using the PSAR. As it makes an excursion up here to the RL270 past the VWAP, I go ahead and lock in the VWAP. So this is definitely a pocket trade. Here was the owl turned, and now here's the continuation play, relax criteria, lazy W, see the swing low, higher swing low. So that pattern leads me to this discussion in IYR. See this all the time. This is what I love to see. You have this confluence of everything here in the middle of the river. And then you get a breakout, a collapse of price structure. You get the first surge down to more than Z minus 2. You get a rebound, doesn't even get to the Bollinger Band mean. This is a high priority reentry if you got out. If you're short here, like you should be, if this gets you out, this is a reentry when that RL10 low is violated. So first leg, second leg, the size of the first leg. Now what you have as this owl is forming, which we just saw, from the RL10 to the RL270 is a maximum excursion, and you get the hump in the dragon or dragon's belly. This was that owl trade we took, and then the continuation trade in the pocket. You'll notice now that thing has gone through the VWAP and the RL270, and it's gotten this far. It's got to come up and test this hump of the dragon. And so you have this confluence, you have this confluence. This was the next location after this owl, where if this downtrend was going to continue, you would expect it to fail here. Yeah, I mean, you would expect it to fail here, but it didn't. You know, the river came down, and then price started to work, so the river flattened out. Right about this time, when it hasn't failed, now the Bollinger Band mean the river is sloping up, and now you come to the place where you would expect it to pause, because now after this excursion of traders' price action away from the VWAP, away from the RL270, you now have it work back in this triangle. I want you to notice. Now we're back to this place. Now, the next leg up, if it works, is going to come up and test this hump and all this volume. And then you would expect it to fail here, just like you would expect it to fail here. But if it doesn't fail here, then off it goes, and you've done a nice job capturing that move. So on this location here, where we would expect it to fail, it doesn't fail, and now your target is here. And so you get this this oscillation, this breathing pattern going on. So this is a simplified sketch of this. This is my flashcard, how I see that shape we just saw. Downward sloping Bollinger Band mean, collapse of price is the RL10, followed by the dragon, and you get some oscillations inside here, but the dragon is smooth and sharpened down, and then you get the owl pattern where you have the unambiguous move, RLCO outside the river, RL10 crosses the dragon, dragon is sloping up, the 30 is sloping up. That's your owl pattern right there in that elbow of that little bend in the river right there, in the dragon. And so this first move might have been a hybrid frog if we were intraday, but really it's the unambiguous move. It could be anything. It could be any pattern that works. I just happen to show this as a hybrid frog because I enjoy that one. But what you have is, after the unambiguous move, the owl represents the change in that first big move, the reversal. And then the next, you have a series of moments in which you have a continuation. So it's just a pocket. It's already turned, but it failed to fail, and it continued to go. That's what the pocket looks like. Had an opportunity to fail, didn't fail. The price is on the correct side of the dragon This dragon is rolling up, so everything is on the north edge. Now, this roll over here. Now, this might be an owl if this was a long enough time period that it allowed the 30 to cross over. But it's not an owl unless that 30 has also rolled over. I don't mind trying this one because the slope of the Bollinger Band mean is down. And really, this is like the not earlier than moment of, actually, this is the not earlier than. This is an RLXD, a pocket, might be an owl, depending on how the RL30 looks like. If I'm going short, that's where I got to try it. So that if it just does this, I have minimized the amount of price that it takes me to find out that I'm wrong. The longer I wait for confirmation, the less opportunity there is, because I think it's only going to come down and test the bottom skin of the dragon down here. So every penny that I wait is one less reward that I'm going to get. So the closer I can get this to this elbow, to that little pocket, if I'm going to go short, the better I like it. My real preference is to play for this pattern, though, to look for the lower low, higher low, find this pocket. If this didn't get me out, maybe that was flat, then maybe I can do a second position if I have enough money in hand. But if it gets me out, then this is my re-entry, and I don't give back much. Maybe I even get some price improvement, depending how steeply down this is. But I see these as continuation patterns, the pockets. This would be a P4, because you had a successful RLCO, found support around the Bollinger Band mean, takes off. All that you need for that pattern 4 is higher lows, and in the pocket, set that as your target. I expect to do a 2R battle drill here. If it doesn't fail, then that next leg up could be as large as this leg up. That's the pattern I want you to be looking for. How far can those traders push price away from the Bollinger Band mean? When it can no longer keep going up and it rolls over, you will see the next owl form, which is now the down move. These little intermediate signals in between are, I just see them as continuations or pocket trades. Afternoon trades in the in IYR just continues that long downward slide. Here is a pocket trade continuation. We'll get this just in the usual way. Look, I mean, everything is out of the river. This is trending. It didn't bounce here. It failed below this RL10 bottom right here. Short. Tight stop above the RL270. Cover right around the time the RLCO is happening. So now you have an owl. An ambiguous move. RLCO outside the river. RL10 crosses the dragon. 30 is sloping up now. Dragon is sloping up. Now I'm long with the owl. Off we go. RL10 comes back into the dragon. Go ahead and get out. Notice that the RL30 is ambiguous here. Don't know if it's up or down, so just wait. Oh, we get a little bounce, roll over again, and now the dragon is rolled over. 30 is rolled over. The VWAP is still kind of rejected here. So as price now is leaving the dragon southern skin, there's your entry. Your stop is up here at Z2. Get that down to the Bollinger Band mean. Maybe by here the north shore of the dragon. Covered. That's the owl. The big turning. Notice the big turning points. Big turning points. There maybe this is a pocket here. It's too close to get a second position in. But that's where that hesitation at the RL270, and then when it collapses, get the next sharp move. Here's one from Joey, a quick hit on win. Yeah, he sees the downward motion, the price collapses, comes down outside Z3. This is a P7. Enters on the rebound on this long wick. Cashes at Z-2 for a quick hit. Well done. And then he gets a pocket re-entry here. Very well done. So unambiguous move down. RLCO outside of the river. 10 crosses the river. 30, the 30 has rolled up. Dragon has rolled up. Beautiful entry. Stop here, right at the PSAR. By this time, after 2 or 3 nice bars in a row, I would have my stop just pegged up in here so I can lock in that little gain. Also from the chat room, here's a nice owl pattern. All the usual suspects. Unambiguous move, RLCO, cross the dragon. 30 has rolled over. Dragon sloping down. Enter. Tries the second one as it crashes through the VWAP. Covered. This leads to another owl. Unambiguous move. The RL10 crest. RLCO outside the river. Crosses the dragon. 30 sloping up. Dragon sloping up. Buy it. Cash it. Here's another owl down here. There's an unambiguous move down. There's that trade. Once you start looking at the owl, you almost can't see anything else. Owls and pockets. Now, Devon Energy, not too dissimilar. Unambiguous move down is one. RLCO crosses the dragon. 30 is rolling up. Dragon is moving up. Enter. There's a pocket. There was probably some intraday volatility. There's a possible re-entry as a pocket entry, but I don't hate that. That's 0.77. This is probably an owl. Sure it is. Unambiguous move. RLCO. Cross the dragon. 30 is now rolled over. Dragon is rolling. You probably don't get that until about here. Another nice little pocket. There's our low or higher low. I don't mind that entry at all. River's up, so this pocket trade, you're trading with the direction of the Bollinger Band mean. I like that. Wants to go up. That's a beauty. And then here you say, maybe that's enough. That's 30 or 40 cents. It's a 1% move. I really like this one from Ashe. The unambiguous move. That's probably the owl entry right here, or a pocket entry. I don't hate this. What I like about this was the exit. Gave it room to try, but the lower high in the 10, and he's able to lock in 0.4 and some change. Take what it'll give. Don't fight it. Let the market decide what it wants to do, and you just profit from it. So I really like the discipline of capturing a fraction. Here's one from Gil on an early entry into CAT. Had a nice gap up, sold off, found support at the edge of the dragon, didn't even get to the river. Takes out the high of the day. I like the entry. Rides the wave. Dragon acting as support at the edge of the river. Very nice. So I just want to leave you with this thought. This is such a common frame of reference intraday. Notice the Bollinger Band mean river. By the time it gets flat here, because of this much price action adversely, that flattens out the river, and then with that higher low, you start getting these self-fulfilling prophecies. The trend is still down. Notice the VWAP. But notice how it came back. Everything came back into this little confluence. Now this move out of there, when it leaves that space, there's the first test, and then it's free and clear if it gets beyond there. So when price did get up here, it negated all of this little trader's excursion, and that's all that was. Price investigation to sense for weakness, and to gather inventory at a good price, and then start managing the trade. So this is Ken Long from Tortoise Capital with our commentary from April 13th. Keep your risk measured and your powder dry.